Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Thursday, August the 20th. Well, today we have a new first time frame uptrend in place. We have a candle with a higher high and a higher low. Previously we had a downtrend in place. The previous day's trading was an outside day, the previous was an inside day, and before that we had a lower high and a lower low. Now we have a higher high and a higher low, which means that the bulls are trying to force this market higher, and we have a first time frame uptrend. Now we do still have a second time frame downtrend, so we need to be aware of that. And what we're doing is retracing part of this swing in the second time frame downswing here, and we're retracing part of that at the moment. So theoretically, in a downtrend, we should find resistance somewhere within this swing, and then the downtrend continue on its way. Now that's not likely to happen because we have support from the Kumo here, and we've seen on the previous occasion and on the previous candle before that there was support at the Kumo, and the top of the Kumo now is acting as an area of strong upside price rejection. The previous candle, as the sellers tried to come in and sell the market lower, buyers came in very strongly and bought the market up, and that was within this Kumo area. Here again today, the market sold off, and just near the top of the Kumo, the buyers have come in and bought the market back up. Now, interestingly though, the buyers weren't strong enough to close the market up anywhere near the highs, and the market is closed near the middle of the range, which means that neither side has gained control. Even though the bulls pushed the market up to a new first time frame uptrend, they weren't strong enough to take control of this market. But then again, the sellers weren't strong enough to take control of the market. Although we do have a red candle, and the red body of the candle means that the bears have made net progress on the day. The sellers have made net bearish progress. So that is a negative for the continuation of this uptrend. Now, interestingly, we've had a little bit of resistance here at the Tenkan-sen, the green line here, and there was only minor selling coming in there, and although the market did close down towards the midpoint level, but the bears weren't strong enough to close the market down any lower. Now, even though we have some bearish short-term dynamics in this market and then some neutral short-term dynamics, the overall trend in the first time frame is still up, so we should expect this trend to continue to the upside. Now, we should be looking at the high of the current candle for the trend to continue up. If not, then the low of the current candle becomes important for a new first time frame downtrend. But remember, as we've said, it's limited by the expected support that we should find at the Kumo. If we do trade to the upside, we have resistance here at the Tenkan-sen and then the Kijun-sen, which is at 948, and then potentially at this swing high, which is at 960, and that has acted as resistance on a previous occasion at this swing high here. If we take out that swing high, then we have resistance up around 971. So the downside is potentially limited by the strong support. The upside is limited by the resistance at 960 and then 970.